One of the key questions every first home buyer asks is, how much can I borrow? So the way you find that out is via pre-approval to a bank. But the really big question is, what is the bank actually considering when you do that? What are they looking at in your application? That's what this video is all about. So number one thing is income and employment. So the bank wants to see steady, secure, reliable income. If you think about any time that you've lent money to somebody, you want to know for sure that they're going to be able to pay it back. And that's no different than the bank. They want to know for sure, have you got the income to pay back the loan? So that's income. Living expenses is the next one. Do you live within your means? It's really simple. Do you live within your means, or are you not very good at handling your money? So that's a big factor. Existing debt is the third one, and that's a really big deal. So what kind of debt do you have? Do you have credit card debt? Do you have buy now, pay later? Do you have student loan? Do you have car loans? Now, none of those things are actually a problem. It's just how you manage them that counts. There's plenty of people out there with loans and buy now, pay later, and credit cards that have mortgages. You just need to prove that you can manage your spending. The fourth item is your deposit, and that's huge because if you've saved up a deposit, you're immediately showing financial discipline to the bank. So it's a really, really good thing, and the bigger the better. First-time buyers often use KiwiSaver, which is good, but a saved up deposit over time really does show that you've got good habits. And then the fifth thing to understand about the way a bank assesses your application is that they will do a thing called stress testing, which means they take your equation, or all of your inputs, your living expenses and your deposit, etc., and your income, and they'll stress test it for if interest rates go up, i.e., can you still afford the loan if, say, interest rates are a couple of percent more than what they are now. So the key points in all of those, just to summarize, account conduct is huge. So by account conduct, what we mean is you need to prove to the bank, do you have 3 months of clean account conduct, meaning no dishonors. So a dishonor is, imagine you come to your monthly bank payment for your gym membership. If that comes up at the end of the month to go out and there's not enough money in there and it fails, that's a dishonor. You can't have 3 months. You can't have one of those within 3 months of applying for a loan. And the great thing is that banks don't hold a grudge. As long as you can, if you've got, I've got plenty of clients who have dishonors, and then I say to them, look, everything fits, your deposit fits, your income fits, but you've got this dishonor. Come and talk to me in 3 months from now when you've got three clear months of bank statements, and we'll put in the application. And that always works. As I say, the banks don't hold a grudge. Income and stability really has to be secure and reliable. And that's the same for self-employed. There's no problem as long as you can show that you've got the means to do it as a self-employed person is a couple of years of financials. And then another key thing to know about with your existing debt is that the bank will use your credit card limit, not your credit card balance. So I've had some clients that get rid of their credit card because it's just putting just a little bit too much pressure on how much they can borrow. So they get rid of it altogether. But that's just a really important thing to know. So finally, the way to wrap this all up is, if you really want to find out about this, you submit a pre-approval application. Once you've got a pre-approval application, it's great because you know exactly the value of the home that you should be looking for. You can have a more targeted approach, and you can search with confidence. Once you find somewhere you can put in an offer, you're in a stronger position with the vendor and the real estate agent, because as a pre-approved buyer, they can see that you're a serious buyer and that you can act faster. Sometimes people want a quick sale.